Welcome to Enviews.ai, your AI-powered investment insights hub. In a closely watched panel at the European Central Bank's Forum on Central Banking in Sintra, Portugal, the world's leading monetary policymakers offered insights into their current thinking, revealing a nuanced approach to tackling global economic challenges. Federal Reserve Chair Jerome Powell, European Central Bank President Christine Lagarde, and Brazilian Central Bank Governor Roberto Campos Neto provided a comprehensive view of the economic landscape, highlighting both progress and persistent concerns. Powell's balanced outlook. Jerome Powell struck a notably balanced tone, neither overtly hawkish nor dovish in his assessment of U.S. monetary policy. He repeatedly emphasized the progress the Federal Reserve has made in bringing inflation lower, stating, "The latest data do suggest that we're getting back on a disinflationary path." This cautious optimism was tempered with a desire for continued positive trends, as Powell indicated the Fed wants to see more data like what we've been seeing recently before considering rate cuts. The latest data do suggest that we're getting back on a disinflationary path. Jerome Powell, Chair, U.S. Federal Reserve. While carefully avoiding any explicit signals about potential rate cuts in September, Powell acknowledged that risks between inflation and the labor market are coming into better balance. He painted a picture of gradual economic cooling that aligns with the Fed's objectives. We're getting a gradually cooling economy, a gradually cooling labor market, progress on inflation, 4% unemployment, 2% growth. We're getting kind of what we want to have. This measured approach suggests that while the Fed sees positive developments, it remains committed to a data-dependent strategy, allowing for patience in its policy decisions. We're getting a gradually cooling economy, a gradually cooling labor market, progress on inflation, 4% unemployment, 2% growth. We're getting kind of what we want to have. Jerome Powell, Chair, U.S. Federal Reserve. U.S. Fiscal Sustainability. While much of the discussion focused on monetary policy, Powell also touched on a critical issue facing the United States: fiscal sustainability. He pointed out that the U.S. is running a very large deficit, describing the current path as unsustainable. Powell emphasized the urgency of addressing this issue, stating, "The U.S. will have to do something sooner or later, and sooner would be better than later." This rare foray into fiscal policy underscores the interconnectedness of monetary and fiscal decisions. The size and trajectory of government deficits can significantly impact inflation, interest rates, and overall economic stability, potentially complicating the Fed's efforts to achieve its dual mandate of price stability and maximum employment. Lagarde's European perspective. Christine Lagarde, while not announcing any new policy directions, provided valuable insights into the ECB's current focus areas. She highlighted several key concerns. 1. Sticky services inflation, which requires close monitoring to ensure the ECB doesn't cut interest rates prematurely. 2. Geopolitical risks, particularly those threatening economies in Eastern Europe. 3. Rising protectionism, which could potentially undermine innovation and, consequently, economic growth. Notably, Lagarde refrained from commenting on the future path of ECB rates, citing the bank's commitment to data-dependent decision-making. She also declined to discuss the political situation in her native France, which faces another round of elections. Campos Neto's emerging market insights. Roberto Campos Neto, representing the perspective of emerging markets, skillfully navigated the complex political landscape in Brazil. While avoiding direct confrontation with President Lula, he managed to convey a crucial point. Fiscal concerns represent the main risk for Brazil, contributing to recent market volatility. On the inflation front, Campos Neto expressed confidence that price pressures will be lower than expected, offering a glimmer of hope for the Brazilian economy. Global debt is very high, and it's going to start taking a lot of liquidity from the market, Campos Neto said. The ones that will feel the impact are the emerging market economies, and the low-income countries are feeling the effect already. The specter of cyber risks. In a revealing moment, Powell identified cybersecurity as the risk that keeps him up at night. This admission highlights an often overlooked aspect of modern central banking: the critical importance of digital infrastructure in maintaining financial stability. As financial systems become increasingly interconnected and digitized, the potential for cyber disruptions poses a significant threat to global economic security. Navigating uncharted waters. As the global economy continues to grapple with the aftereffects of the pandemic, supply chain disruptions, and geopolitical tensions, central bankers find themselves in uncharted territory. The cautious stance adopted by Powell, Lagarde, and Campos Neto reflects the high stakes involved in their decisions. With inflation showing signs of moderation but not yet decisively conquered, labor markets remaining tight, and new risks like cybersecurity emerging, the path forward for monetary policy remains far from clear. What is certain, however, is that the decisions made by these central bankers in the coming months will have profound implications for the global economic landscape. As Powell aptly put it, the goal is to balance the risks of moving too soon or too slowly on rates. In this high-wire act of monetary policy, the margin for error is slim, and the consequences of a misstep could be severe. The world watches and waits as these central bankers navigate these turbulent economic waters, seeking to strike the delicate balance between controlling inflation and fostering sustainable economic growth. Conclusion: a delicate balance. As Powell aptly put it, the goal is to balance the risks of moving too soon or too slowly on rates. In this high-wire act of monetary policy, the margin for error is slim, and the consequences of a misstep could be severe. The world watches and waits as these central bankers navigate these turbulent economic waters, seeking to strike the delicate balance between controlling inflation and fostering sustainable economic growth. The cautious, data-driven approach outlined by these policymakers suggests a period of careful deliberation ahead. For market participants, policymakers, and citizens alike, the message is clear. While there are reasons for optimism, the path to sustained economic stability remains fraught with challenges. As we move forward, the ability of these central bankers to balance competing priorities and respond to emerging risks will be crucial in shaping the global economic recovery. Thank you for watching Inviews.ai, your AI-powered investment insights hub. Please subscribe for more timely investment insights. By viewing this video, you agree to the terms of the disclaimer provided in the description of this video, in the channel or page description.